Good morning, good afternoon, good evening, my dear future chartered accountants. This is Jagan, qualified chartered accountant. Today I'm going to discuss about the most important topic, leases, AS 19. So most probably in this video, I try to upload all the concepts related to leases. Nana. So before going to the leases chapter, let us look at this example. One person is having a house, another person is not having a house. So one person is ready to give rental for a house to another person required and house. In this, the person is ready to pay money to the person and he will accept the money. So what is the consideration means? He required an house for 3 years with a rent of 30K thousand, and he also accepted the same thing that he will give rent for 3 years with the lease with the rental amount of 30K rupees. Where another option is with the person who is taking the house is saying that if the rent after 3 years, if it is 35,000 per month, I will extend for the next 4 years. And the lesser also he's saying that the market price of the rent is 40K after the 4 years, but I will accept because he is my genuine customer. So this is the whole transaction. So now we are going to connect these diagram with the leases definitions. The first definition that I'm going to discuss about lease, it is an agreement between the two parties. So these two parties, it is an agreement between the two parties for use of an asset, use of an right to use of an asset. So right to use an asset in exchange of payments or periodic payments for a certain period of time. This is called lease. Lease is nothing but an agreement between the lessee and the lessor for right to use of an asset in exchange of periodic payments or simple payments for certain period of time. In this example, the property is right to use of an asset is an house property. In exchange that they are exchanging for a money 30,000 rupees per month. That lease period is 3 years. So that you understood the meaning of lease. Lease is nothing but it is an agreement between a lessee and a lessor for right to use of an asset in exchange of a consideration like series payments or periodic payments for a certain period of time. Next, I'm going to discuss about lease definition is completed. Next, I'm going to discuss about the lease period, lease term. Lease term is nothing but non-cancelable lease plus lessee has an option to exercise further some more period if the option is exercisable. When the option is exercisable, Nana, for suppose the rent of the property is 40K after 4 years, but in the lease agreement, they are clearly mentioned that after 4 years, I can give the property for 35K rent for next few years also. So this is also shall be considered in the lease term. Lease term is what is meant by Nana? Lease term is equals to non-cancelable term plus an option is with the lessee that is exercisable in the future. It should be exercisable. If it is not exercisable, then we cannot be considered in the lease period. If you take an example, in this example, what is the lease period, Nana? First, the parties are agreed to exchange to lease and house property for 3 years. This is 3 years is called non-cancelable. We will discuss that non-cancelable term next. So 3 years is a non-cancelable lease. And again, in the lease agreement, what they have mentioned, Nana, I will give, I will give, even though market price is 40K, but I will give you it for 35K after 3 years for next 4 years. So what is the market price, Nana? 40K. What is the lease rental? 35K. Is it beneficial to the lessee or not? Say yes or no. Yes, sir. So if it is beneficial to the lessee, then it would be exercisable. So here the lease term is 3 years plus 4 years. That is called 7 years. For suppose in the same example, in the future, the market price of the rent is 30K only. It is not increased. but the lessor is giving an option that I will give you for next 4 years also 35K. Is it is beneficial to the lessee? No. So here the lease term is 3 years only. So if it is beneficial to the lessee, then it should be added. If it is not beneficial to the lessee, then it should not be added in the lease term. Are you understood this concept? So up to now, you have understood the lease and the lease term. Next, I am going to discuss about lease is completed definition. Next, I'm going to discuss about a non-cancelable lease. Non-cancelable lease is nothing but simple terms. You can you can think, Nana, lessee does not have an option to cancel the lease period. This is called non-cancelable lease. So lessee can cancel only after the approval of a lessor. This is called non-cancelable lease. However, in the following cases, if the lease is cancelled also, then it should be considered as a non-cancelable lease period. In what are the conditions, Nanam? Because of natural calamities like floods, like earthquakes, one house property has been rented, but due to floods, the house property has been collapsed. Because of that, the lease term will be cancelled. This considered as a non-cancelable lease term only. And second one is the X has given a X has given an house property to Y. Y required another house property that is with X. So what X is saying, Nana, ante, X says that please cancel the old lease agreement. Now you can enter into the new agreement with respect to these two house properties. So if he enter into the new lease, cancellation of old lease, and he entered into the new lease property, then it can be considered as a non-cancelable lease only. And the next point is if the lessee cancelled by way of penalty, then it should be considered in the form of non-cancelable lease. Because now I said that lessee does not have an option to cancel the lease. If he cancel the lease, he should be penalized. So if he penalized, then it should be considered in the non-cancelable lease period only. Now I have discussed three definitions. One is lease, another one is lease term, another one is non-cancelable lease. So these three are important, especially two and three are important for the MCQ purposes only. Now I'm going to discuss about important definitions. If you understood these definitions, Nana, then the total chapter is very easy to you. So yes, the total chapter is very easy to you if you understand these definitions. MLP, minimum lease payments in the point of view of lessee, minimum lease payments from the viewpoint of view of lessor, gross investment value, net investment value, unearned income. If you know the definitions of these five, minimum lease payments from the point of view of lessee, minimum lease payment from the point of view of lessor, gross investment value, net investment value, unearned income. If you understood these five definitions, the chapter is over. Damn should you can get 5 marks. So now we'll go. Erase it. 1 minute now. I will erase it. So now I'm going to discuss about MLP, Nana, minimum lease payments. So from the point of view of a lessee, so Nana, the minimum lease payments. What are the lease that paid by the lessee to the lessor? The first one is lease rentals. He may pay every month or yearly. This should be considered in the lease payments. And the second one is guaranteed value, guaranteed residual value given by lessee or on behalf of on behalf of lessee. These two are considered in the minimum lease payments. What are they, Nana? Lease payments that are paid by the lessee. And what are not considered in the minimum lease payments, Nana? The first one is any expenditure which is paid by the lessee on behalf of a lessor and it is reimbursable, then it cannot be considered under the lease minimum lease payments, Nana. For suppose, for suppose, for using a house property, he has to pay a house rent property tax. So he has to pay the property tax. The property tax has been reimbursed by the lessor. Whether it should be considered in the lease minimum lease payments, the answer is no. No, no. In residual, so we have considered these 2 points, Nana. Minimum lease payments from the point of view of a lessee. What, Nana? One is lease rentals every month that you will pay plus guaranteed residual value. We will discuss that guaranteed residual value after completion of these 5 definitions, Nana. Next one is minimum lease payments from the viewpoint of view of a lessor. So from the viewpoint of view of lessor, Nana. The first one is it is common monthly lease payments, and the second one is here only the difference between the lessor and lessee. In lessee, residual value, guaranteed residual value given by the lessee or on behalf of lessee, we have been considered, Nana. With respect to lessor, we have been considering what, Nana? The first one is a guaranteed residual value given by the lessee or on behalf of lessee. It is same, Nana. Or guaranteed of residual value given by the third party on to the lesser. It should be considered in the lease payments. Whichever is the maximum, that should be considered in the minimum lease payments, Nana. For suppose guarantee given by the lessee is 100 rupees, whereas on behalf of lessee given by the it is 120 rupees, whereas third independent party has given an amount of 150 rupees. So what we will consider, Nana, ante with respect to MLP, we will consider 150 rupees because with respect to lesser, the asset value should be fair value, Nana. It should be fair value means whoever will give more guarantee that should be considered in the lease receipt MLP, minimum lease payments. Are you understood this point of view? Minimum lease payment from the point of view of lessee, from the point of view of lesser, from the point of view of lessee, what we consider, Nana, monthly rentals, residual guarantee value given by the lessee or on behalf of lessee, whichever is maximum that we consider. Whereas with respect to lesser, monthly rentals, second one is whichever is higher on what guarantee given by the lessee, guarantee given on behalf of lessee. Next one is third independent party guarantee as given to the lesser. Whichever is higher, we will be considered in the MLP. Next, Nana, what is the usage of MLP? We will discuss in next further of the chapter, Nana. Now, what are not considered in the MLP? Any payment which are attributable or directly reimbursed by the lesser. Then these are not considered in the lease payment. I said example also house property. These are the examples that not considered in the MLPs. So next I'm going to discuss about gross investment value now. It is nothing but MLP plus previously we have considered guaranteed residual value, Nana. Here we will consider unguaranteed residual value. Did you understand what is meant by the gross investment value? It is nothing but monthly rentals plus guaranteed residual value plus unguaranteed residual value, Nana. This guaranteed residual value plus unguaranteed residual value, that both comes into residual value. So I will discuss about residual value. Residual value is nothing but at the end of the asset, some amount will be left in the asset value should be there in the books of accounts, Nana. That is called residual value. So we will consider that residual value while calculating the gross investment. Gross investment is nothing but a total rents plus residual value. Whereas with respect to net Net investment value. Net investment value is nothing but present value of gross investments. Remember that point, present value of gross investments by using the interest explicit rate available in the lease or wherever it is. From the point of view of, if you're calculating from the point of view of lessee, if it is not available, you should take from the lessee's borrowing rate. If you are calculating from the viewpoint of lessor, you should take from the viewpoint of view of lessor. Now you understood the meaning of MLP from the viewpoint of view of lessee, MLP from the viewpoint of view of lessor. Next one is net residual value. Residual value is nothing but guaranteed residual value plus unguaranteed residual value. Residual is nothing but at the end of the life of an asset, the asset should have some value, Nana. That is called a residual value. Residual value, it is guaranteed by some others plus unguaranteed residual value. If you consider these both, then it should be considered as a residual value. Next, gross investment value, net investment value. So gross investment is nothing but present value, sorry, all monthly rentals plus guaranteed residual value, unguaranteed residual value. Whereas with respect to net investment is nothing but a present value of gross investment value. Now, unearned income. Unearned income is nothing but interest income. What is the interest in that gross investment value minus net investment value is called unearned income. If you know unearned income, then you damn surely you may expect a 5 marks from this unearned income portion. So now I'm going to the PPT. So you understood the lease term, as well as non-cancelable lease. These three are important for MCQs. Whereas with respect to minimum lease payment from the viewpoint of your lessor, gross investment value, net investment value, and an income. These five are important for problem solving. It may ask for 5 marks or 7 marks in the examination. If you understood these five definitions, then the chapter will be very easy. First one, Nana. Minimum lease payment from the viewpoint of lessee. What, Nana? First one is we will consider all monthly rentals or yearly rentals plus guaranteed residual value from the view guaranteed residual value given by the lessee or on behalf of a lessee. On behalf of lessee, these two we will consider. Whereas with respect to lessor, monthly rentals plus guaranteed residual value given by the lessee or on behalf of lessee or third independent party. Here, three parties will come. Whereas with respect to gross investment value is nothing but MLP plus unguaranteed residual value. Otherwise, all monthly rental incomes plus residual value is called gross investment value. Whereas net investment value, it is nothing but present value of gross investment value. That is called present value of lease rentals plus present value of guaranteed residual values. Whereas with respect to unearned income is nothing but gross investment value minus net investment value. Please remember this formula. Unearned income is nothing but interest. The interest is equal to gross investment value minus net investment value. Okay. Now we are going to discuss about types of leases. How many types of leases are there, Nana? There are two types of leases. One is finance lease, and the one is operating lease. Finance lease is nothing but if risk and rewards are transferred to the lessee, even though property title is not transferred, then it should be considered as an finance lease. Risk and rewards are transferred, then it is called finance lease. Operating, if risk and rewards are not transferred, then it is called operating lease. So from the exam point of view, how to recognize whether it is a finance lease or an operating lease. If it is less than 12 months, it should be considered as an operating lease. If it is more than 12 months, sorry. No, it's not correct, Nana. Finance lease and operating lease, risk and rewards. How you can classify whether it is an operating lease or finance lease is nothing but the LEASE has given 8 points to consider whether it is a finance lease or operating lease, Nana. Those are bifurcated into two parts. One is deterministic in nature. If any one of the condition is satisfied, then it should be considered as an finance lease. However, suggestive in nature, even though if all the conditions are satisfied, then we cannot be treated as a finance lease. First five conditions are most important, Nana. You can easily remember. The first point is a transfer of ownership. At the end of the lease term, at the end of the lease term, the owner of the asset is transferred to the lessee, then it should be considered as an finance lease. Transfer of ownership is the first point that you have to be remembered. If the ownership is transferred at the end of the lease period, then it should be considered as an finance lease. Second one is, for suppose the asset life is 10 years, the asset used, the asset given lease is 8 years. Substantive period is with the lessee only. Then it should be considered as an finance lease. Second one is, for suppose in a hospital, for suppose X requires an asset which can be used by X only. That asset cannot be used by any other person. It is for the specific purpose of the lessee. Then it should be considered as an finance lease only. How many points of transfer of ownership? Next one is a substantive period. Next one is it is for the specific purpose of the lessee only. Then it should be considered as a finance lease. And the fourth point is for suppose the value of an asset is 10 lakhs, the person who is giving minimum lease payments is less than or equal to or more than the value of an asset, then it should be considered as an finance lease. If any one of the condition is satisfied, then it should be considered as an finance lease. Nana, anything miss? Last one is no, no. The last point is at the end of the lease period, the lessor has given an option to the lessee. From the first day that you are saying, from the first inspection of the lease, the option is exercisable, that is beneficial to the lessee, then it should be considered as a finance lease. 5 points you should be considered. One is the transfer of ownership at the end of the lease period, then it should be considered as a finance lease. And the second one is, if majority of the life is with the lessee only, then it should be considered as a lease period. If majority of the amount is recovered from the lessee, then it's also considered as an finance lease. And fourth point is, if it is specially made for the lessee only, then it should be considered as an finance lease. If the option is exercisable for transfer of ownership, it is beneficial to the lessee, then also it should be considered as a finance lease. Nana. So finance lease. If these conditions are not satisfied, then you should be treated as an operating lease. Those three conditions are not that much important, Nana. What they are given, if lessee can cancel the lease and the lesser losses associated with that are borne by the lessee only. What is saying, Nana? If the contract is cancelled, Nana, if any loss associated with the lease agreement, it should be borne by the lessee. So if this condition is satisfied, then it should be considered as a finance lease? No, no. Just these are suggestive in nature. If these conditions are there, then you might think it may comes under operating finance lease. Not surely it is an finance lease. Previously, I have said no. What? Previously, I have said five conditions. If those any one of the condition is satisfied, then it should be considered as an finance lease. It is very important from the MCQ point of view. If any gain or loss or fluctuations in the residual value accrue to the lessee, then it should be it cannot be considered as a finance lease. Nana. It is a waste of, for suppose it is feeling that 1,50,000 will be the residual value. Now, for suppose at the end of the year, if the residual value goes to 2 lakh rupees, then the difference will be there, na gain that should be reduced from the lease rentals, by the lessor. However, if it goes to 1 lakh rupees, the lessee has to pay 1,50,000. In extra 50,000, he has to pay extra in addition to the lease rentals. So even though if all these three conditions are satisfied, we cannot feel it is an operating lease, finance lease. First five conditions are more important for MCQ purpose also, for classifying whether it is a finance lease or an operating lease. So Completed now. Now I'm going to discuss about accounting treatment. First, I will discuss about finance lease. Finance lease accounting treatment in the books of lessee. Next, I will discuss about accounting treatment in the books of lessor. Next, I will discuss about operating lease in the books of lessee, in the books of lessor. Then the chapter is over. And a small topic is the sale and lease buyback transaction. That is not much important. First one, Nana. From the I said lease term. Lease term. You should calculate lease term from the definition. Now we have to calculate at the inspection of the lease. You have to calculate two, Nana. One is asset as well as lease liability. In the books of lessee, what we will be considered as an in the books lease liability shall be considered lower of fair value of an asset or present value of minimum lease payments from the viewpoint of view of lessee. From the viewpoint of view of lessee, whichever is lower, we have to be considered. What we have to consider now? Fair value of an asset or present value of an minimum lease payments from the viewpoint of view of lessee. That is called monthly rental incomes plus residual value. What will be the journal entry at the lease inspection, Anna? That is called asset account debit to lease liability account. Whereas with respect to while calculating the present value, so interest rate should be taken, Anna. Interest rate is if it is available in the lease agreement, then you can take that is an direct. However, if it is not available, then it should be considered as an borrowing rate of an lesser. So now initial recognition we have booked, whichever is lower we have done. Next subsequent recognition. What will be done? Every year you should recognize interest by using the borrowing rate or interest explicit rate available in the lease agreement. So what will be the accounting entry will come, Nana? First lease liability account debit to bank account. You will be posted one entry. Next, what will come? Lease liability you have to be credit credited and interest has to be debited. So interest account debit to lease liability will come. So put together, what will be the entry will come? For suppose my every month, every year, I will pay 1 lakh rupees lease lease rentals, Nana, on which I will get an interest by using interest explicit rate is 10,000 rupees. So to bank is 1 lakh rupees, lease liability is 90,000, interest account debit is 10,000 rupees. This is the subsequent accounting. So whereas with respect to asset, we have already recognized, Nana, we have to depreciate as per AS 10. What will be the accounting treatment? Asset account debit to depreciation account debit to asset account will come. So now I will summarize accounting treatment in the books of lessee. Financial lease. Financial lease. So first you should think that first initial recognition will be fair value lower of fair value of an asset or minimum present value of minimum lease payments. Okay, are you understood? So what will be the journal entry? Asset account debit to lease liability account. What will be the subsequent entries for lease liability? First, you should understand we use the present value, so we have to book interest. So interest will be debited. So from that lease liability, we are paying lease liability account debit to bank account. First, you have to write bank account total amount. ऊपर जाना, उधर आपको इंटरेस्ट लिखना, दोनों का माइनस करके उधर लिखना है. ठीक है, यही है. Now we will solve one problem, then we will understand the concept of accounting treatment in the books of lessee. ठीक है ना? I will take one question directly from your ICA. Yes. No, it is not required. Yes. It is saying, no. Square Limited, Private Limited has taken a machinery from SK Limited. Please find out who is lessee and who is lesser. SK Limited is an lesser, whereas Square Limited is an lessee. First, whenever you read the question from the lease, you should understand who is lessee and who is lesser. Here, SK Limited is an lessee. whereas SK Limited is an lesser. So Square Limited will be an lessee. So you understood this one? Yes. Now the following data is in lease period is 4 years, Nana. So you need not to calculate lease term here. They have given directly lease term is 4 years. What will be the fair value of an asset? 20 lakhs. What will be the lease rentals? 6,25,000. At the end, Nana, whenever you go to the lease, whether it is giving in the year end or end of the year or starting of the year, you should be considered. Please underline this word, end of the year. Next one is residual value is 1,25,000. Expected residual value is 3,75,000. In which unguaranteed residual value is 3,75,000 minus 1,25,000. So I will write the data here in Excel sheet. First what, Nana? Lease rentals. What will be the lease rentals? 6,25,000. Lease period what, Nana? 4 years. Am I right? Yes, sir. Next, residual value, Nana. 3 lakh, 3,75,000. Whereas guaranteed residual value, Nana. How much guaranteed residual value? 1,25,000. So unguaranteed is not required in the lessee. I never use unguaranteed residual value in accounting treatment of finance lease by the lessee. So interest rate is 15%. Now he is asking about what is asking, Nana. Discount rates are given. So discount rates are given. What is it? Calculate the value of lease liability as per AS 19 as well as journal entries at the end of the year, Nana. Okay. First, you should consider. First, you should consider lease liability. Lease liability. What I said, Nana. Fair value. What will be the fair value? Sorry. Fair value of an asset will be 20 lakhs. It's very difficult to use Microsoft Word as well as Excel. So fair value of an asset will be 20 lakhs. And present value of minimum lease payments. So if you calculate the present value of MLP, the answer is over. How do we calculate present value of an MLP? Use format. Here monthly rentals, discounted factor, here Nana, amount. It will come. Year 1, 2, 3, 4. How much? How much? Lease rentals 6,25,000 for 4 years. Okay. Sorry. So in the fourth year, what is going on? Guaranteed residual value also should be considered in the MLP. Okay. Then what will be the discounting factor? Discounting factors are already given in the question, Nana. So 08696 for the first year, 07561 is for second year, 06575 for the third year, and 0.5718 for the last fourth year, Nana. If you multiply this with this one, you will get the present value of MLPs. So what is that amount? So 18,55,850 rupees. So I said lease liability or asset should be recognized at the lower of lease liability or fair value of an asset. No, no. Here, what will be the lower value? So minimum, I use the formula. So lease liability will be 8,55,850. Then in the first at the lease inspection, what will be the accounting entry? Asset account debit 8,55,000 to lease liability account. So what will be the 8,55,000? Next, first year, Nana. If you go through directly for calculation of interest rate, Nana, you may get wrong. Please follow the format suggested by me. First, what we have to write? Year. Next, opening balance. Next one is interest. Next one is payments that you made. Na? Next one is closing balance. What will be the opening balance? What will how many years? 1, 2, 3, 4 years. What will be the opening balance? 8,55,850. What will be the interest? This into 15%. Implicit rate they have used. What is no implicit rate? 15%. Okay. What will be the payment that you are making? 6,25,000. What will be the closing balance? This plus interest minus payments. Am I right or not? Yes. Say yes or no. So every year, same. This interest rate 15% into this much amount, 6,25,000 into this one into this one. Minus if you get this. So, Nana, the point that you consider, Nana, whether you are doing a correct calculation or wrong calculation, at the end, the answer should be zero. There should be no lease liability from the books of accounts. If it is a 33 rupees or 100 rupees, that may be the rounding of differences while we are calculating the present value. So please consider whatever may be the round difference, 32, 33.27. What zero over this table, if you prepare now, then it will be very easy. Then in the first year, what you will do? How much lease liability you are paying? Lease liability account debit how much? 6,25,000 to bank account. How much? 6,25,000. Now what you have to book the interest. So interest has been debited, whereas lease liability has to be credited. So INTEREST interest account debit how much? 2,78,372 to what? Two means to lease liability. So complete and at the end of the first year, we have to do the same entries. Whereas with respect to year end to year two, year 3 also same 6,25,000 you will pay. In year 4, how much you will pay? 7,50,000 something you will pay, Nana. 6,25,000 monthly lease payment, whereas guaranteed residual value also you will pay. Okay. What will be the interest will come here? So interest will be this one. So this will be the accounting entries for all the years. So this will be an accounting treatment for all the years, Nana. So this is very simple from the viewpoint of your lessee. Many of you will confuse. Don't confuse. With respect to lessee, you have to be considered minimum lease payments, monthly rental incomes plus or yearly income plus residual value guaranteed by the lessee or on behalf of lessee, which whichever is higher, you have to be considered, Nana. From the viewpoint of view of a lessee, accounting treatment, first you should recognize an asset and liability, lower of paid value of an asset or present value of an MLP. MLP, present value, how interest explicit rate available in the lease agreement. If it is not available, then you should go with the borrowing rate of an, let's see. Then you should consider whenever the question will come, first you should identify who is lessee and who is lesser. Then fair value, it is already given in the question, whereas with respect to present value of MLP, you have to use the format year plus year. Next column is lease rental. The next column is present value figure. Next one is amount column. So you can get the present value of minimum lease payments. So you have to consider fair value of an asset, how much, and lease rentals, how much. So whichever is lower, you have to be taken. And next, before going to the interest, before going to the entry, you should calculate the interest calculation. So use my format. First one is year, next one is opening balance, next one is interest, next one is the principal, next one is the payment, last one is closing balance. If you use the last year, in the closing balance, it should come zero. If it is some manual, some different 100 rupees or 200 rupees, it is a manual.